Here is another video brought to you by Lake Worth Beach Mortgage. Today's topic is mortgage rates in April 2022. Conventional mortgage rates hit 5% in April. They should be in the 6% to 7% range by summer. The next 3 months are going to be brutal. It is forecasted that during the next 3 months we will see some brutal changes to fiscal and monetary policy by the Federal Reserve starting in May. The Federal Reserve will be turning from an expansionist policy to a more contractionary policy. They are making these changes to slow inflation, which is currently around 8%. Ideally, we want to see inflation around 3%. These changes will lead to better market conditions for borrowers in the long run. Getting there will be tough for everyone connected to real estate. Of the differences between monetary policy and fiscal policy. Just remember that monetary policy is adjusting interest rates in general, and fiscal policy is about the deficit, which is already outrageous, but they are trying to start reducing the deficit. Here are the differences in monetary policy during the last 2 years. During the pandemic, our government was purchasing about $50 billion of mortgage-backed securities each month. Interest rates were made very low to stimulate the economy. A 30-year conventional loan was as low as 2.75. By the end of 2021 and the first quarter of 2022, our government decided to taper the purchase of mortgage-backed securities to help slow inflation. They went from purchasing 50 billion mortgage-backed securities a month to 5 billion in mortgage-backed securities each month. Interest rates went from 3% to 5% in 120 days. We are over 5% now. Here's the monetary and fiscal plan. Our government plans to sell about 75 billion in treasuries each month. They also plan to sell 50 billion in mortgage-backed securities each month. They also plan to increase the federal funds rate 50 basis points probably in May. All of these measures will cause interest rates to rise. All of these measures will slow inflation. All of these measures will strengthen the dollar. Many borrowers will get blocked out from purchasing for a while. Home prices should slow down or even drop. What we can do in the meantime, look at adjustable rate mortgages again. They are about 0.5% better than a 30-year fixed right now. You can get a 5-year, 7-year, or 10-year ARM and ride out the storm. Most Floridians stay in their mortgage less than 5 years anyways because we're kind of transient down here. If you're looking at a jumbo loan, you can take one with an interest-only feature. This will make your payment more comfortable and you can send principal when you want. Avoid home equity lines of credit. They are going to get hammered. Fear not, mortgage rates are cyclical. You should be able to refinance out of a high rate in a few years. Once again, my name is Preston Ware. I'm over at Lake Worth Beach Mortgage. Please give me a call if I can be of service. Thank you.